What you got?
So I will, well, I mean, I like to sort of make Paul guess. So I'm going to leave it for you guys at home to guess. But my company dates back to about the 1960s. It was founded as Hanson's Building Products. Primarily, it makes bricks and blocks and other peripherals for the construction industry. But it's bricks and blocks that I'm going to focus on for the sort of vast majority of this. So for the uninitiated, I just wanted to give a really, really quick guide on how a wall and a ground floor is constructed. Internal side of a house is almost always blockwork. These are the larger grey blocks that you see on site. The external bits that you actually visually see when you look at a house, they're brick. If your house is rendered, which is when they paint it with a concrete spray, it's likely that you have blocks on both sides of the cavity. It's much quicker to install, and it's ugly, but it's going to get covered in a painted concrete spray, so you'll never see it. In between the two is what's known as a cavity. This is what they're stuffed full of insulation. Laughably, this has been one of the only developments we've made in an industry in this kind of department. They just made the cavity bigger so they could fit more insulation in it and make it more thermally efficient and call this like development. To give you an idea of how many blocks are used in an average 3-bed house, it's about 22,000, and there's about 5 times that in bricks. So the ground floor of a modern house is likely made of beam and block, which is a series of concrete lintels spanning wall to wall, and in between the lintels is a concrete block, the same ones that they use on your walls. So we build it this way because it allows you to suspend the floor off the ground, and in case of any kind of light flooding, but it also retains its strength, and it's less springy than if you use a suspended timber floor. You don't need to treat it, and it doesn't rot every sort of 80 years and you end up falling through your floor. So I mentioned all of that just because I want you to get a sense of just how much block and brickwork there is in a modern construction. So anyway, I want to give you a little bit of history on the company before we move on. So through the years, this company has been like a mad acquirer. So it's acquired Thermalite, which is a block maker, Marshall's Flooring, a beam and block floor manufacturer, Red Bank and Formpave, both of these are in the sort of chimney and chimney pot manufacturers, and arguably its most important acquisition, it acquired the London Brick Company. So I've got a question for you, Steve. Right, you got a question for me? It's called the London Brick Company because the bricks are still made to this day in
Bangladesh.
Peterborough. Tough luck, Steve. So a little bit more history. In 2007, they were actually acquired themselves by a cement manufacturer called Heidelberg. Heidelberg actually broke them up and sold a remainder of them off to a private equity firm who, in the following years, span out the UK operation and renamed it to the name it has today. It was finally admitted to the FTSE in 2016 and is now firmly in the FTSE 250. So since then, it's actually acquired Bison, which is a 100-year-old prefabricated concrete construction company. This is to dip its toe into off-site construction, where the house itself is shipped in full to site rather than being built on site. It also is about to complete work on Europe's biggest ever brick factory right here in the UK, which will allow Forterra to double its current capacity on that site and lift its total production to around 600 million bricks per year. So the market itself is actually in shortfall. So in 2008, Britain made about 2.8 billion bricks a year, but since we've had the crash and the slowdown of the housing economy, that actually killed off a lot of our manufacturers and our local manufacturers. Now we're down in about the 2 billion range, and we actually need 2.4 billion, even though we don't build enough houses. So we have to import the rest, which is just not cost effective. Any money you save on labour is completely diminished in logistics because of the weight of the product. So I guess in short, the battle for those remaining 400 million bricks is on. So moat, yep, there's a moat here. London Bricks is the absolute jewel in their crown. These are used in 20% of all buildings in the UK. So even if you think that we won't be buying new houses as much in this impending recession we're about to have, that will lead to more extensions because owners will crave more space. So theoretically, up to 20% of all the extensions that we're about to have will be looking for a London brick match, because nobody wants a match where nobody wants an extension where the bricks don't match. That looks silly. They've got a bit of pricing power as well, Steve. They've passed on rising energy and labour costs to their customers. They've actually increased their prices by as much as 25% this year. So I had a quick look at the customers for you. They've got the ones you would expect. They're suppliers to builders merchants such as MKM, Travis Perkins, to Hughes, Gray, All Nationals. They're also suppliers to major house builders like Persimmon, Barrett Homes and Bellway Homes. They also make concrete products too, so these have been used in car parks and hotels and hospitals. And they've been involved in really prestigious projects such as University College London, Alder Hey Children's Hospital in Liverpool, even Wembley Stadium turned to this company for its concrete. So risks, I've got some risks for you, Steve. No stomp for Paul would be complete without me giving some risks. So here what I think this companies are. The shortfall in bricks has led to a rise in what's called non-standard construction. So in the UK, we're really trying to plug that shortfall. We're doing some really sort of inventive things. The most direct competitor is something called ICF, which stands for Insulated Concrete Formation. These are like wood fibre blocks. They're absolutely massive. One side of it's already pre-insulated. They arrive that way. You lay them on top of each other, and when you get to a certain height, you jam steel rods down them and you pour concrete down them. That's one way. The other way you do it is you do pre-cut polystyrene. It sort of links together like a big jigsaw. It's all numbered, so you can't possibly get them wrong. And then you hold them in clamps, and then when you get to a certain height, again, steel rods, and you pour concrete. Now, these are laughably bad. They literally, the minute you start to pour concrete down them, because it is essentially polystyrene, the stuff that your TV turns wrapped, is packed with, it starts to split. The concrete comes pouring out of them. The people on site are desperately trying to clamp them back into place while getting covered in concrete. They belly out, and they're just, I can't see it catching on. It might improve, but I can't see it. What it does win on is thermal performance. They absolutely wipe the floor with bricks and blocks on thermal performance. So it depends on where you see us going. So financials, this group owns almost all of its assets. It has about 2,000 acres of land, has 17 factories around the country, so there's very little pricey rents on the balance sheet. It's also launched a power purchase agreement with a dedicated solar farm, and that anticipates it will cover about 70% of its energy costs. It's spending about 4.1 million on rooftop solar over the next couple of years to supply another 5%. So these guys are laser focused on optimization at the moment. Sales increased 26% year on year, profits up 28% year on year. And whilst I think this is going to slow in the short term, it's clear to me we've got a bit of runway here. If we start building the houses that the UK desperately needs, there's definitely growth. I'm going to give you a small caveat that this was against some pretty poor comps, and it's actually a couple of percent under what they achieved in 2019, but they do have a factory that's been refurbed at the moment, so that explains that. CapEx, Steve, came in at about 21.3 million, of which 15.8 million was related to the new factory refurb I discussed earlier. There's more capex to come too, because they're going to close a second factory for a similar size refurb once they bring the Desford factory back online. This is pretty smart in my books. I think the best time to refurb is when demand is showing signs of quietening down. But you can sub that one-time expenditure off if you want and add an extra 15.8 million to that bottom line, and you can see the sort of company that you could potentially be buying here. So I'll give you a quick rundown of the other financials. £2.70 a share, market cap's just over 600 million. PE is about 11 over the trailing 12 months. It's buying back about 40 million of its stock, give or take. That's about 6.5% of the float. It has 10 million of debt, 34 million in cash at the moment. It's pretty cash generative. This allows the chief exec to pay an attractive growing dividend. Last year it was 11.3% per share on EPS of about 26p. And that's about a 4.25% yield, Steve, while being on that sort of 50% payout ratio. So there's a bit of flex there. So my question to you, and you, Steve, and you at home, is why are you bothering messing around picking up your favourite house builder where you can get some exposure to the industry as a whole here?
It's a very good question. I was looking at that, looking at just now actually, and the numbers for valuation actually look even better than you said. I've got it marked at 584 million of a market cap, which gets you a dividend of 4.25, price earnings ratio of around 10. And I'm increasingly becoming unsure. I mean, if there was a reason I would worry about this, it's pretty well covered already, which is that I would kind of assume that bricks were a bit of a commodity, at least to an extent. But they're not, for two reasons. One, you made the point about extensions, that there's a need to match them here, so they're not all the same. And the other thing is you mentioned pricing power, which you definitely don't have in the case of commodities. So I'm kind of taken with this one. I like the look of this quite a lot, to be honest with you. I have this idea that, I had a look, there's no debt, so that kind of PE becomes sort of relevant to me in a certain way. I struggle to see what Paul's not going to like in this particular one.
It's got literally everything for him. It's got a dividend, and that's all he looks for.
Yeah, I mean, I don't own a UK house builder. I think Paul does, for what it's worth. And does he own Taylor Wimpey? Does he own some sort of house builder?
Yeah,
Probably
I think
does.
he owns...
They all pay dividends, right? So
yeah, he owns one of them. They pay big dividends, so he'd be really attracted to them.
yeah. Oh, I like that a lot as a stock. But how about the rest of you? What do you think of Forterra? What do you think of Kraft Heinz? We've both gone for things that have dividend yields over 4%, one way or another. So we'd be interested in what you'd think of this one. It's not our kind of usual game, big dividend yielding stocks, but it is absolutely the case that we've been looking at the kind of more risk off end of things as it is. Do you own the stock, by the way, Steve? I don't own Kraft Heinz at the moment.
Yes, I bought Forterra about, well, in full disclosure, I own Salesforce, I own Intuit, and I own Forterra, so it's literally been a show about my stocks, and Teladoc. So yeah, there's a big list of stocks I own there. I bought Forterra, I've only bought a really small position, it's about 0.5% of my portfolio. I started buying it about a month ago, just before its earnings came out, and then I saw its earnings, and I had a good read through its annual statement, and I've bought about another 0.5% of my portfolio on top of that. I'm not intending to buy an awful lot more because I don't want massive exposure to UK house builders or basically to the construction market, but I do feel like this is within my circle of competence.
Yeah, very much so.